price action there. This is the bond market where it's a lot deeper. Abuja analyst now.
Phone still on. Phone, can please turn off our phones, please? Thank you. Distinguished members of the press, ladies and gentlemen, the Monetary Policy Committee met on the 22nd and the 23rd of May 2017 against the backdrop of slowly improving global growth prospects, even as international cooperation continues to be threatened by anti-globalization sentiments in major advanced economies. On the domestic front, the economy has shown greater resilience in the intervening period since the last meeting of the committee and called on more focused macroeconomic policies and improvements in oil prices. While the general economic outlook seems cautiously optimistic for the remainder of the fiscal year of 2017, emerging indicators suggest that economic policy must remain circumspect. In attendance were 8 out of 12 members of the committee. The MPC assessed the global and domestic economic and financial environments in the first 5 months of 2017 and the outlook for the rest of the year. The external developments. The global economy continued to gather momentum during the first quarter of 2017, aided by gradual recovery in the emerging markets on the back of a pickup in global demand and higher commodity prices, coupled with fairly robust domestic demand in the advanced economies. Accordingly, global output growth during the first quarter of 2017 is estimated to expand by 2.8% annualized. In spite of the fairly optimistic global economic outlook, uncertainty surrounding the direction of macroeconomic policy in the advanced economies continues to cloud the prospects of sustained recovery. Global inflation appears to be upward trending on the back of improved commodity prices and depreciated currencies in several emerging markets. Domestic output. Data from the National Bureau of Statistics (NBS) showed that the economy contracted marginally by 0.52% during the first quarter of 2017, a much more positive development since the first quarter of 2016. The data also shows that about 18 economic activities recorded positive growth during the first quarter of 2017, indicating that the economy was firmly on the path of recovery. The key growth activities were led by quarrying 52.4%, metal ores 40.79%, road transportation 12.35%, water supply and sewage 12.6%, fishing 5.49%, crop production 3.5%, oil refining 93.01%, motion pictures 2.95%, telecommunications 2.89%, forestry 2.59%, among others. The committee noted the positive effects of improved foreign exchange management on the performance of the manufacturing sector and other economic activities. The non-oil sector grew by 0.72% during the first quarter of 2017, largely reflecting the growth recorded in agriculture and solid minerals and recovery in the manufacturing, construction and services sector. The committee urged the fiscal authorities to expeditiously commence the implementation of the recently approved 2017 budget, especially the capital expenditure portion, in order to sustain the momentum of recovery, engender employment, and restore confidence in the Nigerian economy. Money and price development. Committee noted that money supply M2 contracted by 8.48% in April 2017, annualized to a contraction of 25.544%, in contrast to the provisional growth benchmark of 10.29% for 2017. Net domestic credit grew by 1.4% in April 2017, annualized to 4.21%, which is significantly below the 17.93% provisional growth benchmark for 2017. However, net credit to government grew by 24.08% over the end of December 2016, representing an annualized growth of 72%. The committee was concerned that growth to the government continued to outpace the program target of 33.12% for the fiscal year of 2017, while credit to the private sector declined considerably, far below the program target of 14.88%. Headline inflation year-on-year moderated for the third consecutive month, falling to 17.24% in April from 17.26% in March, 17.78% in February, and 18.72% in January 2017, effectively reversing the monthly upward momentum since January 2016. The food index component, however, rose to 19.3% in April from 18.4% in March and 18.5% in February 2017. The moderation in headline inflation in April 2017 thus reflected the decline in the core components to 14.8% in April from 15.4%, 16.0%, and 17.87% respectively in March, February, and January 2017 respectively. Similarly, month-on-month inflation moderated to 1.6% in April from 1.72% in March 2017. Committee attributed these developments in part to the effects of the recent gains in the Naira exchange rate brought about by the bank's interventions in the foreign exchange market and the resulting downward price adjustments on imported items and their derivatives. Against this backdrop, the committee emphasized the need to sustain and deepen the bank's foreign exchange management policies and measures in order to reap the benefits of the pass-through to consumer prices. The Monetary Policy Committee recognized the continued influence of structural factors such as high energy and transportation costs, production bottlenecks, on prices, and hoped that the ongoing reforms by the government would address some of these constraints. Money market interest rates moved in tandem with the level of liquidity in the banking system. Rates were relatively stable during the review period. The interbank core rate opened at 11.4% on March 22, 2017, and closed at 38.94% on May 18, 2017. The movement in net liquidity position was influenced by sales at the open market operations, foreign exchange interventions, the payment of statutory revenues to state and local governments, as well as maturing CBN bills. The MPC noted the bullish trend in the equities segment of the capital market as the all-share index rose by 10.2% from 25,516.34 on March 31, 2017 to 28,113.38 on May 19, 2017. Similarly, market capitalization increased by 10.1% from 8.83 to 9.72 trillion naira during the same period. Relative to end of December 2016, the capital market indices rose by 4.6 and 5.1% respectively, reflecting growing investor confidence following improvements in foreign exchange supplies reflected in the over $1 billion injected through the investor window and exchange rate management. Total foreign exchange inflows through the CBN increased by 69.77% in April 2017 compared with the previous month, as foreign exchange receipts were significantly higher. Total outflows, however, rose by less significantly at 29.35% during the same period. Consequently, the committee observed that the average Naira exchange rate remained stable at the interbank segment of the foreign exchange market during the review period. The overall outlook and risks. Available data and various forecasts of key economic variables, as well as assessments of government initiatives, including the recently released Federal Government Economic Recovery and Growth Plan, all point to prospects of recovery in 2017. The committee expects that the timely implementation of this plan and timely and judicious execution of the approved 2017 budget and sustenance of the new foreign exchange implementation regime, supported by the restoration of security in different parts of the country, especially in the Niger Delta region, would help accelerate growth and restore confidence in the economy. The MPC, however, identified the downside risks to this outlook to include the possibility of low oil prices due to renewed investments in shale oil production and production continuing monetary policy normalization by the United States Fed, which may result in strengthening of the United States dollars and consequent capital reversal from Nigeria and other emerging market economies. Also, the MPC believes that the inflation outlook does not appear benign, as the limit of the base effects driving the current moderation in prices may have been reached. The considerations of the committee. Notwithstanding the improved outlook for the economy, the committee weighed the implications of continuing global uncertainties arising from dwindling commitment to global cooperation, the strengthening of the United States dollars, and the unsteady commodity prices. Committee similarly evaluated other challenges confronting the domestic economy and the opportunities for achieving economic growth and price stability in 2017. The MPC was of the view that whereas the downward trend in inflation in April 2017 is a welcome development, the rate was still significantly above the policy reference band. Committee is particularly pleased with the gradual retreat in inflation, the relative stability in the Naira exchange rate across all segments of the foreign exchange market, and the improved prospects of foreign investment inflows. The committee also welcomes the passage of the 2017 budget and called on relevant authorities to ensure its judicious implementation, especially the capital budget in line with the Economic Recovery and Growth Plan. It, however, noted the associated risks to banking system liquidity of the envisaged fiscal injections during the remainder of the year. Against this risk, committee contemplated the prospects of further tightening of monetary policy should the need arise. The MPC, however, noted that further tightening would widen the income gap, depress aggregate consumption, and adversely affect credit to the real sector of the economy. Nevertheless, against the backdrop of the rather unclear outlook around key economic activities, food production especially, and some optimism about current deceleration in inflation, as well as relative stability in the Naira exchange rate, the Monetary Policy Committee was reluctant to alter the current policy configuration in any fundamental manner. This is intended to allow the existing policies to fully achieve their intended goals and objectives. On the other hand, committee noted that the cost of capital interest rate in the economy remains high and not helpful to growth. The Monetary Policy Committee was, however, concerned that loosening would exacerbate inflationary pressures and worsen the gains so far achieved in the exchange rate of the Naira. It was also convinced that loosening will further increase the negative real interest rate as the gap between the nominal interest rate and inflation widens. On the financial stability outlook, committee noted that in spite of the banking sector's resilience, the weak macroeconomic environment has continued to exert pressure on the banking system. The MPC urged the central bank, to intensify its surveillance in order to address emerging vulnerabilities. The committee also called on the deposit money banks to step up credit to the private sector to support economic recovery and convey a positive feedback to the financial system. Committee's decisions. In consideration of the challenges weighing down the domestic economy and the uncertainties in the global environment, the committee decided by a unanimous vote of 8 members in attendance to retain the NPR at 14% alongside all other policy parameters. 1 member was absent at the meeting. In summary, MPC decided to 1. Retain NPR at 14%, 2. Retain CRR at 22.5%, 3. Retain liquidity ratio at 30%, and 4. Retain the asymmetric corridor at plus 200 and minus 500 basis points around the NPR. I thank you for listening.
Thank you, Governor. Distinguished ladies and gentlemen, we have listened to the communique, the 113th communique of the MPC, arising from the 256th meeting of the Monetary Policy Committee of the Central Bank of Nigeria. It is now time for questions and answers. If you know you have questions, please come walk across to this side. Tell us your name, tell us your organization, and please ask us just one question. And the house rules, the question must be directly related to the subject matters mentioned in the communique. Thank you very much.
Hello, good afternoon. My name is Raleigh Akadino from Classic and Manchester Country. My question is, it's 2 years down the line for this present administration, and one of the change mantra for this present administration is bringing down the naira to $1. As the monetary authority in charge of this, how do you intend to bring this to reality? Then, secondly, thank you.
Good afternoon, Governor. My name is Emmanuel Okemokai. I work with the IC. Governor, you mentioned during your speech that there were considerations and fears that the United States may withdraw backings or cash, and this may exacerbate the forex and make the dollar stronger. Consider the fact that in the last MPC or last 2 MPCs, you emphasized that there was going to, the CBN was going towards a convergence between the parallel and the official rate. How far have you gone in this convergence? And secondly, what is the future of this convergence, considering the fact that the United States may be strengthening its dollar? Thank you.
Good afternoon to the government. My name is Uchi Usi of Solutions. So you said that the economy will be out of negative growth by 20%. This is the this answer.
Good afternoon, Mr. Governor. My name is Raham Saidi from Radio Nigeria. You talked about the positive impact of the forex intervention on imported goods. Please, I'd like to know what impact the investors and exporters window of the forex market has had on the economy, and how much has been traded in that segment so far. Thank you.
Good afternoon, sir. My name is Mara Polai. I work with TBC News. So you say the deposit money banks should increase lending to the private sector. I'm saying this vis-a-vis the fact that the MPR rates, the monetary policy rate is left at 14%. Now, does the CBN really mean this? At what cost really to lend to the private sector? Then the disability fund, I'll let you get the end.
It's just in line with the interest rates. I want to know, rather than just falling on the banks to reduce and to increase lending to the real sector of the economy, can any action be taken by the CBN? Any action be taken by the CBN to really ensure that this is done, that is lending to the real sector of the economy by the banks?
Still related to that, I'm talking about the lending rates as well. I know manufacturers will call for reduction and maybe single digits in the lending rates in order to help production. I don't know if they are considering that as well.
Please hold on, please. Yes, go on.
I said manufacturers, I know they are calling for reduction, maybe a single digit lending rates in order to help production. I don't know if they are considering that as well.
The last question.
Good afternoon, Governor. My name is Ojima for Business Day newspaper. We know we have been driving convergence of Naira, and we are wondering what rates are you looking at, considering the fact that we have so many rates. We have the rates, we have foreign market rates, we have for different players in the economy. So what rates are you looking at? And what's the target really? How far are you ready to go with defending the Naira to drive this convergence? What's the target? Thank you.
Thank you so much. It's now time for, this is a drop load. It's now time for the governor to take the questions in any order, Mr. Governor.
Yeah. Thank you very much. Let me start with the issue of convergence. What rate will that be? Central bank will not determine what that convergence rate will be. But the point is that you would have observed that about 3 months ago, although we would always say that there's no need for us to use the parallel market rate as the basis of benchmark for determining the value of the Naira, you will observe that about 3 months ago, that market was above 500 Naira to the dollar. But today, we started to see a downward trend. We have indeed seen downward trend from that level to as low as, at some point, 375, 370, and now hovers between 375 and 385. That, for us, is a significant achievement in the direction of convergence of rates. We would prefer a convergence that would significantly be going southwards than a convergence that will go northwards. So the fact that we are seeing a convergence in the southward direction gives us a lot of hope that things are working in the right direction. How far will CBN go in sustaining its current intervention? I have said it, and I will repeat myself, that CBN, the interventions will be more vigorous and intense to underscore the fact that we are determined to ensure that the Nigerian economy recovers by making sure that foreign exchange is made available to all sectors of the Nigerian economy to conduct their business. Manufacturers have called for a reduced interest rate. Indeed, it's not only manufacturers that have called for a low interest rate. Even me, I want a very low interest rate. But the economic aggregates that is usually presented to us, or that we see today, unfortunately does not give room for us to begin to look at that direction of signaling a further downward trend in interest rates. And the truth is that, and you would have read IMF or World Bank reports, and what they have always insisted is that indeed we should tighten, and we should tighten further. But rather than tighten, what the Monetary Policy Committee has decided to do is to hold and then watch, given that we had embarked on a consistent policy tightening before we decided to adopt the hold strategy. And it is because at that time we saw inflation trending high to the point where it went to as high as the above 18.5, close to 18.6. And we thought that there is no point we would continue to allow inflation to rise. Like we know, we have data that supports the fact that once inflation rate in Nigeria goes above about 11.5 or 12%, it becomes growth retarding. So no matter whatever action you take to stimulate growth, as long as inflation rate is above 12.5%, it will retard growth. So for that reason, it's important that we consider that that MPC says, look, let us really tackle inflation. And I'm very delighted that from around the month of January or February, we've seen a downward movement in inflation. And I'm hoping that as we achieve this further down to a level that moves close to our reference rate band, and as we sustain the FX interventions and achieve convergence in the direction that we hope and foresee should be, then it will not begin to be a turn of looking at how can we begin to loosen so that interest rates can remain, cannot begin a downward movement. Can any action be taken by CBN to ensure deposit money banks lend to this rich sector of the economy? Basically, these are economic agents, and we know that you cannot legislate on some of these actions or these policies. What we would expect is that as long as the central bank gives signals support for the real sector of the economy, like for instance in this case we talk about ensuring that foreign exchange allocation goes to the real sector of the economy for raw materials, for plant and equipment, to support agriculture and all that. That will in turn direct the attention of the deposit money banks to look at lending to those sectors, because by that signaling we make it clear that those are the priority sectors of the economy that we would like to see everybody direct their attention at. Deposit money banks should lend to the private sectors. Private sector. Well, I agree with you, and the data that we have gives credence to the fact that the truth is that private sector is actually crowded out. You find that if the fiscal authority is borrowing money at high rate, naturally at a risk-free rate, everybody will jump at it rather than pursue risk granting of loans to sectors which is considered not a risk-free sector and the rest of them. But I think that government is increasing, the fiscal authorities are increasingly looking at the possibility of going to the external environment, and as that happens, there will be less of pressure in the money market, and with that, deposit money banks will find out that they do not have any choice but to lend to the private sector as the fiscal authorities begin to direct less attention or more attention to the external environment. There was some positive intervention of the CBN in the investors will know what is its impact. I must say that I'm gratified that just in 4 weeks we've seen over $1.1 billion coming in through that window, and it gives credence to the fact that this is a decision in the right direction. And truly speaking, central bank's intervention in that window is about or less than 30%. So which means that if about 70 or more percent is coming in from the non-oil exporters, as well as some of our foreign investors, portfolio investors, our friends, it means that it is working, and it only means that we need to give more support to that. Because that market is a willing buyer, willing seller market, And I do not think that anybody will come up and say that they have seen the Central Bank of Nigeria leaning to the banks as in trying to lean to them about the direction of exchange rates. It's a willing buyer and willing seller market. But I'm also delighted that what we see in the last, when this window opened, the rate was as high as 400. But now it has aggressively moved downwards, and it is ranging right now to as low as 350 to 384, 385 naira to the dollar, which is a very, very positive sign. And we've also seen the trend, the bullish trend, in the equities, in the capital market. We've seen stock prices move up. We've seen, like I said, the market capitalization move up. We've seen the all-share index move up by as much as 3,000 just within 2 to 3 weeks. These are strong positive signs that tells us that we are on the right course, and all we need is everybody's support to continue to push in this direction. I'm so optimistic that we'll get to the end of this journey. Economy, out of that I had said the economy will be out of recession at the end of the third quarter and all that. Do I still hold the view? My view is that with all the positive signs we see, inflation trending downwards, GDP, I would say, improving to the extent that the negative growth rate has decelerated, I would say, quite significantly. The fact that we've seen Forex go to real sector and production capacities and industrial capacities are beginning to improve. We've seen positive signs in various economic sectors of the economy. I am relatively, I'm very confident that by the end of the third quarter, that we would be out of this, and I still hold that position. Fears of US Fed normalization and its impact, yes, naturally, you would have observed that we highlighted that as a risk that could upset the gains so far. And we also highlighted as a risk the possibility of increased production of shale. That if those happen, it could upset our numbers. But I think what is important is the fact that, yes, we must continue our drive towards diversification of the economy. No doubt, the normalization of the US Fed normalization will lead to movement of funds from emerging and frontier market back to the US, and will no doubt have adverse consequences on these economies. But I'll say that I do not anticipate that those adverse consequences will be so intense in our environment, because these investments have long left us, and we are just in the direction of trying to attract them back. So I am not that pessimistic that the adverse consequences of US Fed normalization will hit us so badly to the point where we begin to see a reversal of the gains that we have so far achieved and that we crave going forward. I think that is it. Thank you very much.
Yes. Thank you, Governor. It remains for me to thank all of us for being such a good gathering, and we say thank you and goodbye till we see you again in July. Thank you.
And it is a rate that is used just to determine the budget, and like you heard, the budget is a forecast. It is tentative. So I cannot understand why people are using budget rates as a basis to say that is an exchange rate in the market. The parallel and visiting market rate, as far as I'm concerned, is one rate, and I don't understand even the duplicity about the rate. We seized the opportunity when the issue of the pilgrim's rate came up last year to explain what happened. And I keep saying that you must put yourself in the position of a businessman where you have struck a deal that this is the rate at which you will do a deal. But because the conditions are now against you, you now go back and begin to change the conditions. That is an unfair business practice. I repeat, what happened was that sometime around March of last year, the Pilgrims Commission, both Christian and Muslim, approached the central bank, and at that time the rate was 197, and that was the market rate at that time. The people who were going on pilgrimage started to make payment at the rate of 197 to the dollar. They made their full payment in advance of the pilgrimage. They now want to embark on the pilgrimage sometime in July and August. Then somebody says, oh, because market has moved, they should pay 300 as the case in whatever rate it was. That would have, on the part of central bank, been seen to be an unfair business practice. Just like if the rate had gone down, would we also go in the same direction? So it is important for people not to just play to the gallery and begin to, they know what they are doing, they know what they are saying, but I say their motive should be best known to them. I've heard about airline and fuel import rates. It is untrue. These are all rates that operate within the interbank segment of the market, and they operate within the range. So I thought it's important for me to address that because I've heard so many comments regarding this rate, and I hope and pray and beg those who are out there fomenting these bad stories in order to present the monetary authorities in bad light to please assist us. If they have questions, they should please approach us and we will respond as appropriate. Bloomberg talked about FX policy government about that the government was talking to the central bank to change the FX policy. The foreign exchange policy right now, we are operating since June the 20th, the flexible foreign exchange market. And like I said, that document remains a sound document. But of course, one way or the other, there may be a few issues, a few fine-tuning that has to be made in terms of the implementation strategies. And we'll look at it from time to time. But I'd like to say that there is nothing wrong with that document, and there is nothing wrong with what the central bank is doing at this time to stabilize the exchange rate and see to it that the currency stabilizes at a rate that we consider to be in line with any model that anybody wants to use to determine the price or the value of our currency. That is what we're doing. And we will continue to stand by it. We will continue to assure those who are doing their businesses that as you require foreign exchange, we will continue to support you, and there is no need for anyone to panic. Thank you.
Thank you.
Yes, we said that about 50 billion naira will be set aside to sort of help or assist in revamping some of the textile industries. We've started to disburse them. We've not quite disbursed everything, but I know that in the 80s and even up to the early 90s, the textile industry used to be the second largest employer of labor in Nigeria after the public sector. We will continue to give our support, even to the textile industry themselves, because we want to see the textile industry grow and indeed even blossom. In today's world, where we are all confronted with the issues of bilateralism and trade practices and the rest of them, I think it's important, and I mean, people are talking today about jobs for their people, jobs for the people in their country. I think that it's about time we all started to now look more at even some of those sectors that used to create jobs for this country, so that we begin to see more of our young graduates begin to go to factories to work as graduates or go to companies to work as graduates rather than being on the streets as unemployed persons. Thank you.
Yeah, it remains for me to thank everyone who has come and to say we'll see you again in March. Thank you.